Hi, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, just charts, no BS. We're going to get into the hardcore nitty-gritty of what the technical analysis on various charts are telling us. Let's start with the S&P futures here today. Now, what we're seeing here is the S&P futures making a move up over the last 30 minutes. So we're looking at the 10-minute chart. This gives us a view of what happened yesterday. We had that early little sell-off, then we kind of rallied back to the upside. And then you could see that yesterday overnight, the futures fell, chopped sideways, and then caught a bid at 4:30 a.m. Eastern time. We went up, consolidated, and now we're getting a move up here. Now, what do I think is going on here? Now, listen, there's probably news breaking as we speak, or maybe some various positive statements. My guess is this move is that it's telling us that there's some general optimism that the government shutdown will be ended here either today or tomorrow, or maybe there's even a deal. And anytime you see the futures making a move, it's likely on the back of some positive news. So we'll see later today if that's the case, or maybe the deal falls apart. Yesterday, there was the prospect of a deal and it fell apart. But obviously, the more time that it stretches, the more pressure will be on the politicians to find a deal. So right now, futures are moving up. What are we going to be watching on the S&P 500? Just exactly what we've been watching recently. There's two things on the upside that I'm watching. Number one, we had a topping tail on Friday. Do we get a daily close above the topping tail, which is around 667.51 on the S&P? A daily close above the topping tail would negate that as a bearish indicator. Okay, so remember, every bearish indicator, just like every bullish indicator, will have a point where it is negated. And it's important for us as technicians to always know where that point is, because we can react then. If you don't know, then you're kind of just left, oh my goodness, is it negated? Is it not? Emotion takes over. When we have specific reasons or factors that negate it, it gives us a very clear-cut signal, right? So that's what one of the things we're looking for. On the other side, there's this orange trend line that has worked as support and resistance going back to 2023. And that, my friends, is just fractionally higher at around 67.60 today. So again, today's candle would be right up here, and it would be around 67.60 or so. So you got about a 12-point range on the S&P where one can be negated, but the other can still hold, and this is what we'll be watching. Now, if we get above this level and confirm, then the markets can continue to push up until the next level gets hit. But as of now, I'm respecting the current levels as technical analysis teaches us to do. So watch those two factors, guys. 67.51 for negation of the topping tail, 67.62-ish or so on the S&P for the orange resistance trend line. Now, notice why I'm not really talking too much about this trend line down here, because we're still a ways away. If we start to fall in the coming days, we'll start talking about, okay, what are we looking for here if we tag this trend line to the downside, which is currently about 100 points lower than current levels at around 66.50 to 66.60. All right, looking at the dollar today, the dollar continues to catch a little bid. Again, we've been kind of monitoring this on the daily chart, wondering, and I talked about this yesterday, could we be putting in an inverse head and shoulders on the US dollar? And again, we don't know yet because it hasn't broken the neckline. Head and shoulders only matter when the neckline is breached. The neckline currently is around 98.60. If the dollar closes above, the DXY closes above, we then can start doing a measurement to factor in how high the dollar could rally. We take the low of the head to the neckline. Wherever it breaks, we do an extended move out, and that would take us up to approximately 101 on the DXY. But please understand, head and shoulders literally mean nothing until they're triggered. It's nice to see the pattern. It gives you something to watch, but so many people jump the gun before it's triggered and say, oh, this is a guarantee up move. Well, it's not guaranteed, right? First of all, nothing's guaranteed in trading. Number two is probabilities only start to heavily take over once you break that neckline. All right, so we'll continue to monitor that, folks. The 10-year yield today, if we'll go to the daily chart, is flat to negative. On the weekly, this is the chart I like to watch because it's just a lot cleaner. And what we see here is that we're still holding above this trend line. All right. Now, having said that, is this chart eventually a chart that looks like we're going to break lower on the 10-year yield? The answer is yes. A couple reasons. Number one, generally, the more times you hit a trend line, the weaker it becomes, especially when you start going like this and hammering on it every single week, touching that trend line and piercing that trend line. In addition, in technical analysis, this would be considered a small bear flag formation, which again would favor a downside move. So again, while we haven't broken, and we do want to respect that we haven't broken, the probabilities are slightly favoring based on pattern formation that we could see a down move on yields. Now, the big question is, a lot of people think, oh, if yields go down on the 10-year, isn't that really good? Doesn't it mean cheap money, more money to go into the stock market? The answer is yes, technically it is, but it's also can be a negative. And the negative would come in if the reason for the drop in interest rates on the long end is because the U.S. economy is collapsing. If that starts to happen, then a drop in yields will be met with selling in the stock market versus buying in the stock market. All right. So just keep that in mind. Now, yesterday I gave you guys a level on AMD that I was going to short with the live day trading room. That was at this 227 level. It hit beautifully. In fact, pre-market, if we look at this, guys. Just before the open, it pierced my line on the intraday chart. And look at that dump. And we caught this yesterday beautifully. I'm sure some of you guys caught it as well. It was a great shortable level right here at 227. It paid out all the way down to basically 205 before we kind of chopped and then went a little bit lower into the end of the day. Now, we are seeing a little bit of a bounce today in AMD. The question is, where will it go? But on a technical analysis basis, is this a good chart or a not so good chart? And the answer is it's not really a great chart for AMD. Number one, the double top held, right? Double top hits, that's resistance. Number two, anytime you have a gap up and a massive red candle, that's telling you big money is dumping like crazy. And it's never healthy to close at the lows like it did. Now, in general, once you get these, you'll get some resumption in buying because the news was generally positive. And you'll see something like this. But what is that starting to form? That's starting to form a bear flag formation. And generally, we look for further downside in the charts off of a candle like this. And I remember, folks, I'm not telling you what is going to happen. I don't have the ability to do that, obviously. I'm telling you that when you see this formation 100 times, the odds strongly favor that. Not that they're guaranteed, they just favor it. And that's really the name of this game, where we ignore emotion. And we always say, listen, verified investing's mantra is no BS, just charts. And the idea behind that is that, listen, I could go on social media and find crazies that are telling me AMD is going to $1,000 a share by the end of this year. And there's other crazies that are telling me it's going to zero by the end of this year. And the answer is neither one of those are probably correct. In fact, I would almost guarantee it that neither one of those are correct. The key is, how do we ignore that and all the crazy FOMO or FUD that's in the market and focus on what is the most likely outcome based on probabilities? And that's where the charts come in. It is what it is. It's my best avenue. And I teach this stuff because this is the only way I ever became a profitable investor or trader. It just is. You know, anytime I would go on social media, it would get me riled up to either exit a position in panic or get in at the highs, and I'd end up losing money. And so that's really where the charts have saved me. And I hope it saves some of you guys too. All right. Now, looking at NVIDIA. NVIDIA is still staying in a tight wedge pattern. This pattern is tightening more and more. We are watching as a technician which way it breaks. Does it break out here or does it break down here? As of now, is there a trade in on NVIDIA? The answer is no, not really, because it's just like this, right? What we're watching is, does it break above or does it break below? And the idea is wedge patterns work like a spring-loaded, basically a rocket. It tightens more and more, price gets condensed more and more, and then when it breaks, it has a big move in one of those directions And that's really what we're watching for on NVIDIA. So we know a big move is coming on NVIDIA, either north of 200 or probably back to 150. All right. The question is, which way does it break? And we're going to let the charts tell us. Like, again, same thing. You could go on social media or mainstream media, and you'll have people telling you, oh, it's going to break up. It's going to 250, 300, or it's going to break down and it's going to 150 or 100. But in reality, the charts are what are going to give us the bias, the probability outcome. All right. A couple other charts here. We got to talk about air pockets. All right. Air pockets, folks, is what I'm concerned about with this market. And you're looking at APP, App Lovin'. App Lovin', by the way, someone got the news early yesterday that this was going to happen, by the way. And I keep on pointing this out because it drives me nuts. I've never seen it so blatant where insider information is leaking out from government agencies. All right. And again, to just explain this, yesterday morning, App Lovin' collapsed early in the first couple hours of the day. And then in the afternoon, volume got light and it floated back up. And then miraculously, in the last 10 minutes of the day, it was announced that the SEC was investigating them for some of their practices. And the stock literally dropped 20% in 10 minutes. So my point is that whatever was going on there early in the day, someone was heavily selling or shorting that stock that knew that news was going to come out. In any case, my point is this. When you have a market that is so extended without any sort of corrective pullbacks, we haven't had a 3% drop in the market basically since the lows of April. And really, I don't even know about a 2%, maybe a 2% pullback from peak to trough on the markets. It creates air pockets. All right. So bubbles, like they say, right? Bubbles just expand. And when they break, there's an air pocket below. And that's what you're starting to see on some of these names, that when they get news, they're so elevated that they collapse to the downside. So to just give you a sense of this, App Lovin' it got added to the S&P right here, and it went straight up from the close the previous day at 490 to $750 in a straight line. And then all of a sudden it starts to come in, and then the air pocket breaks, and literally in one day, it went down and negated all of these previous moves almost to where it opened up. The low was basically where it opened up when it was added to the S&P 500. And so my point is just be prepared. I have no idea what stocks out there are going to get these air pocket corrections, but just be aware that if you get bad news on any stock that has been going up nonstop in the last couple months, like vertical, like a Robinhood, like something like that, that's just gone parabolic, the downside isn't going to be like 3%. It's probably going to be 15, 20% very quickly and flush out a lot of people. So that's just my warning. I've experienced this in the .com era, same sort of thing in 08, 09, in 2020 with COVID. All of these type of things were there. Now, going on to the next chart. This chart is Micron. Now, Micron had a reversal yesterday. So this candle on Micron is also a topping tail. And so I pay attention to topping tails when they're extended moves. Doesn't mean it can't get negated, but we do want to pay attention when you form a topping tail, especially on a day where good news hit. Yesterday, we had the AMD OpenAI scenario. Yesterday, we talked about how shady that is. Essentially, what we talked about, and I'll just rehash for any newbies out there. AMD's expected to get $100 billion in revenue over the next 4 to 5 years from OpenAI. So OpenAI will pay AMD for their chips, $100 billion over the next 4 or 5 years. And to pay for those chips, AMD is giving warrants up to 160 million shares to OpenAI at a penny per share, basically. And so with AMD over $200, think about how much money that is when you can sell 160 million shares. And ultimately, that's going to finance what they're going to pay AMD. So AMD basically financed their own demand for their chips. Do you see how that works? Like, it's so weird. And it's so like, is this real life type scenario? Like, these are companies that are worth 300-400 billion. Like OpenAI got valued at 500 billion. And by the way, NVIDIA did this with OpenAI like a month ago. And it's just like, okay, like something's a little off here. Now, listen, the market is willing to overlook it. In extreme bull markets, bad news is good news is good news, and no news is good news, right? And I think that's where we are right now. But it just, these type of things just set off alarm bells in my head. Like, pay attention, guys. Like, at some point, the party stops, and that's where things get crazy. All right. Intel, which is a government-owned company now, at least partially owned, that's a topping tail as well. So a lot of topping tails on various semiconductors. Look at the reversal in STX yesterday, opened higher and ended at the lows of the day. Look at WDC. Look, opened up, closed lower. These are more and more bear signals on semiconductor stocks. All right, Tesla. Tesla is set to announce some sort of new thing today. People are expecting some sort of new car model or something like that. The stock had a great move yesterday. It's down a little bit today. It doesn't change the fact on a purely technical analysis basis, this was about as nasty of a candle as you can get. That candle is called a reversal engulfing candle. And that is even worse than a topping tail. Topping tails are bearish. Reversal engulfing are even more bearish. So just be careful here, because this candle is the dominant force on a probability basis, unless, just like a topping tail, you get a close above. Now, again, by no means have I been a bear on Tesla. I loved this. This is one of those classic wedge patterns. It broke out, retraced, and went on a run. We talked about that back then, that it was bullish, and it certainly played out. But I'll tell you guys when something's bullish, and I'll also tell you guys when the chart is telling me bearish. And right now, as long as this candle holds, that's a bearish signal on Tesla. Apple continues to be in a parallel channel. I'm looking for upside still on Apple. Listen, it's high risk because the markets are so toppy, but Apple could go up to as high as about $280 before it hits this bigger parallel tier. So again, listen, it's hard. I'm certainly not buying Apple up here, right? But if it goes up here, would I short it? Yeah, I would, because past history shows me that that's a great situation to short. All right, let's get into Bitcoin. Yesterday, Bitcoin, we talked about my upside target. What was my first upside target? 126,002 to 300. 126, 2 to 300. What was the high yesterday? 126, 2 to 300, basically. It hit the level. Where's this level coming from? Simple. 2007 high right here to the highest point right here in 2021. We did pierce it, but on a basis of trend lines. Notice this high did not touch that trend line. So this was your highest point for the trend line. And then look, hits, hits, and hits. Now, listen, we talked about that if we're able to break above this, your next target is a parallel at 130. But again, like I always say, I respect the levels until proven otherwise. That's a good technician. Listen, we all have the tendency to have biases. We all want to say, oh, it's going to blow through this level, no problem. I'm sure there's people watching right now that says, oh, it's going to blow through that level. Gareth's crazy, blah, blah, blah. That's fine. I hope it blows through it. But as a technician that follows charts, I have to respect that line. That's just what you have to do. It's not fun. It doesn't let you dream. It is what it is. It uses logic versus emotion, which I can only speak from personal experience. That's what I found has worked for me. All right. Gold. Gold is pushing up here, guys. My target for gold is this parallel here, classic parallel. What price is it at? Interestingly enough, it's at 4,000 approximately, a pierce of 4,000. And so we got to think that gold pushing up again today could be nearing that 4,000. We're only $16 away. Once it gets there, just like we said, could it go higher? Sure, it could. But probability-wise tells us that every time it's at the low end of the parallel, it gets a major move. And when it's at the high end, it gets a pullback, right? So I have to just go with that and respect it until it is proven otherwise. All right. So again, we'll keep that on our radar and I will keep you guys posted. But it certainly looks like today might be the day where we get to 4,000 on gold. Incredible. I still remember, folks, in 2022 into 2023, gold, I said, was going to break out and be one of the best performing assets. And I literally got roasted on every interview I did by the comments. Like, oh, I can't believe he's so bullish. Gold never does anything. Gold, Bitcoin is et cetera, et cetera. And I stuck with it. And gold has been incredible. It's doubled in value here. If we look at this, you have to give gold credit. If you go back to 2023 right here, it was trading at basically 2000. By the way, look at the pattern, right? We look at patterns. I mean, these are things that I saw in the charts that alerted me. That is one of the best inverse head and shoulders and consolidation phases I've seen in a long time, right? That was just fantastic. It told me the breakout was coming. I did the math on the US debt, the fiat currency issues, all of these issues. And lo and behold, 100% later now, gold is up again, 100%. Incredible. Silver. Silver here, guys, pushing up. Beautiful move. Again, low end of my target has been hit. My upper end is up here around $50 and change. It looks like it wants to try to push up there, but it is now in that resistance zone. I still think it goes at least and pierces 50. We'll keep it on our radar. Oil again, guys. It bounced off gap fill. Now it's coming back in a little bit. We'll see what happens. Let's watch to see, does it form a bear flag here? Natural gas continuing to hammer on the X marks the spot of resistance here. If it can get through here, I think you get quite a move up. I would think you go up to 420 on nat gas. So this is a big level. It's still resistance. We still have to respect it. But if it's able to get through here, 420 is written all over on nat gas. All right, couple questions that I want to quickly answer for you guys here as we bring them up. Let me just bring them up on my screen for you guys, or at least on my screen, and I'll read them out. Here is a question. LUMN looks like it's breaking out, but hasn't confirmed yet. What do I see? LUMN, Lumen Technologies. All right, let's go to the charts here on Lumen. Okay, so technically, yes, it has broken out already. The question is, are you late to the party? And the reason I say that is because you did have a move up. Here was your consolidation, right? And it's now broken up. For me, it does look like it's breaking, but it's already, for me, I just can't chase. I mean, this is, again, if you look at this a week ago, it was trading at $5.50. Now it's at $7.20. By no means does this say it can't go up like Rigetti. I mean, Rigetti is a great example of just continuing to go higher. But certainly, this wouldn't be something that I would be buying here because I don't like to chase. If it was still consolidating in this pattern, that's a different story. You have the bull flag, you get the max upside. But at least for me, I'm going to pass on this. But yes, it has broken out per that, and we just don't know how high it's going to go. Is AMD forming a head and shoulders pattern? Let's take a look. We'll go back to AMD. I didn't see a head and shoulders pattern here. Inverse head and shoulders. The answer is it technically does have an inverse head and shoulders. Correct. Right here would be that inverse. This would have to be, it's a little wonky because you have this kind of pseudo one here. But if we look at this and we just kind of keep it simple, then yes, it did have an inverse, but it's already broken out to the upside. It hasn't reached target yet, technically. So, it could. But to do that, it has to break through double top. But yes, good spot on that. My only concern is it's not a crisp, clean inverse head and shoulders because you have like this pseudo second shoulder over here. I usually like the shoulder to be the lowest point. And that would mean this one. And again, some of you guys might be thinking, well, isn't it the lowest point if we do this as the shoulder, right? Let me draw this in and teach this real quick. And the answer is no, this wouldn't be valid because you can't have an uptrending neckline on inverse head and shoulders. It has to be flat, horizontal, or down sloping to have the max impact. So this would have to be the shoulder. And in that case, you don't have the lowest point. It's not the lowest point on the shoulder. So there's a few little small issues there, but it doesn't mean that it can't play out. It just means the probabilities are a little bit less on that. Great questions, guys. I have more questions. Didn't get to them today. I got to get to my trading room. But suffice it to say, you guys are rock stars. I love the fact that I have a growing group of you as the views for this game plan expand that are all about logic and chart analysis and not all the BS that we get bombarded with in everyday life when we're on Facebook or X or all these other mediums out there, including mainstream media where they're pushing the latest upgrade that happens to be at all-time highs. And it's like, all right, yeah, you're just upgrade. Think about this. Last thing I'll say, and I don't have much time here, but you have a stock that's like $700 now, and then an analyst is like that had a price target previously at like 400 is like, oh, we're going to raise it to $750 now. That's our new price target. It's like, okay, dude, really? But of course, the stock gets a bid in a bull market because of that. And then it's usually the top. And again, you could see that. By the way, that happened literally yesterday. There was an upgrade on APP to like $750 or $800 a share. and then it dumped 20%. So just be aware, guys. Upgrades when stuff's extended. These are analysts that are playing catch up, and you got to know, be very careful on those. Be very, very careful. They're just trying to play catch up. It just is what it is. All right, I got to get going, guys. Love you all. Share this with friends and family. Do all that kind of stuff if you think they would be interested. I'll do my best to keep teaching all my methods here, guys. Again, have a great rest of your day. Take care.